Hello students, Assalamu alaikum. Today we are going to discuss the November paper of O levels, paper 12. So here is your paper. See, November 2023, paper 12, O levels, 7707. Okay. So, uh, okay. Now here is your first question. Which actions are example of bookkeeping? Bookkeeping means recording transactions in the prime books. There are 7 prime books in our syllabus. And yes, entering details of check received from customer in the cash book. Yes. Entering detail of goods purchased on credit in the purchase journal. Yes. Producing an income statement to calculate the profit note. This is not the job of bookkeeping. This is the work of accounting. And what about next? Recording details of credit sales in the account of a credit customer. Yes. This is also work of a bookkeeper. So it means B option should be the answer. 1, 2, and 4 are correct statements. Okay, a trader supplied the following information at the year end. Okay, non-current assets, inventory, trade receivable, cash at bank. Debit means as an asset, cash at bank is an asset account, and trade payables as a liability account. What we have to do, we have to calculate the trader's capital. Is very easy. Add all the assets, 4,000 plus 350 plus 180 plus 650 minus 280 liabilities. Asset minus liabilities, 4,900 is the answer. Now, a trader Kareem purchases a new vehicle by check. He will use the vehicle to deliver goods to his customer. How should Kareem record this transaction? Very easy. Motor vehicles debit, bank credit. So, these two options are A and B options are useless because we don't debit bank. Okay. Because we are paying for the motor vehicle, we don't debit bank in this transaction. When we are buying, we don't debit purchases. Purchases is only for when we are buying goods for resale. Okay. Now, the following ledger account was appeared in Mina's sales ledger. Sales ledger means this is a customer's account. But the thing is, we were owed by the Mina was owed by this customer $100, which the customer has paid on 15 January. On 30th January, he has returned the goods. So now we don't have to receive anything from this customer, but we have to pay to this customer $20 for the return. It means this asset account, the customer account, which was supposed to be an asset account, now turned into a liability account. Okay. Now, which document would a supplier issue to a credit customer if the credit customer had returned goods or had been overcharged? Now, if we are returning goods, it means whenever a buyer is returning goods, the seller or the supplier should issue credit notes for the return and overcharge. Okay. Andy was a regular customer of Khalid. He bought goods with a list price of 1,000 and later paid 760 in full settlement after receiving a discount from payment of 5%. It means 5% is a cash discount, and after availing cash discount, he has paid $760. Now the thing is, what is the difference between the list price and the net cash price? Okay, so we have to find the actually we have to find the amount of trade discount here. So this 760 is the net cash price. We have to calculate the invoice price. Are you getting my point? So we would come to know how much trade discount was given. So how to calculate invoice price? See, 760 multiplied by 100 divided by 95 because he is availing 5% discount on invoice price to get a net cash price of $760. So that means the invoice price which was supposed to be paid 760 multiplied by 95 divided by 760 multiplied by 100 divided by 95, the answer is 800. So 800 was actually the invoice price, on which he was given a 5% discount for prompt payment, and he got $40 discount as a cash discount. So list price was 1,000, invoice price was 800. It means, yes, the trade discount should definitely be $200. Okay. Now, the total of a trial balance, agree. Okay, what does it mean? Arithmetic, all the arithmetic in the ledger is correct. Not necessary. There might be error of transposition or error of original entry. All transactions have been entered in the correct accounts. Not necessary. There might be error of principal. All transactions have been entered on the correct side of the ledger. Not necessary. There might be an error of complete reversal. The only thing is left is the option. All the total debit balances and total credit balances in the ledger are equal. This could be the answer. A check received from Joe was credited to Jonah's account. What type of error? Yes, definitely it's very easy commission, error of commission. When there is a mistake in the name of customers or suppliers, there is an error of commission. Now, a trader has made a correcting entry. This is correction of error. We have rectified the error. When we have rectified the error, they are asking what was the error, which has been rectified through this transaction. Getting my point clear? So what we have to do, it means both are sellers. Well, sorry, both are customers and we are the seller. So it means A and B options can't be applicable because of this wrongly credited. When we sell something, we don't credit customers, we debit customers. So when Jane is credit, it means we have not sold goods to Jane. We have sold goods to Joe. So this was the error. We sold goods to Aaron, but we wrongly debited Jane for that. Okay. A trial balance does not balance and a suspense account is opened. It is found that a sale of 250 was credited in the sales account as 2,500. So we have to debit sales and create suspense. When we have to debit sales, we will have to decrease sales by 2,250. So it's very simple. B option should be the answer. Okay. Because we have to decrease sale. When we have to decrease sale, we have to debit sale. So these two options, C and D, are useless. Okay. Now, 11. A check received from D. Powson. A trade was correctly debited to bank account, was carried to account of P. Dawson. A trade payable. What was the effect of correcting this error? Okay. Now, P. Dawson was a supplier. Okay. It means instead of crediting trade receivable account, we have created trade payable account. So in that very case, what happened? When we rectify this error, the trade receivable is going to be decreased because it was not decreased when we received the money. And trade payable will also decrease because when we have created a trade payable, our liability has increased. So when we rectify this error, both trade receivable and trade payables are going to be decreased. A option should be the answer. Okay? Because at the time of receiving the money, we did not credit trade receivable. So trade receivable is standing where it was. It was supposed to be decreased, but it was not decreased due to this error. And the liability was increased erroneously because we have created a supplier by this amount. So when we rectify this error, trade receivable, eventually trade receivable will decrease and trade payable will also decrease. Okay. The balance of a bank column in trader's cash book was 520 debit. Okay. The trader later discovered that the following item did not appear on bank statement. Check not presented, check not yet created. What was the balance of trader's bank statement? Okay, the balance, when balance, bank balance in the bank column trader is 520 debit, it means that cash book is showing that we have $520 available in the bank. Okay. What we have to do, we have to add, we have to add 520 plus uncredited 80 minus 470 uncredited tax. 120 is the 130 130 should be the answer. Okay. So 130 is a positive amount, so it means it should be credited. When we have amount available in bank, our cash book shows debit balance and our bank statement shows credit balance. Okay. Now, why does a trader prepare a sale ledger controlled account? Okay. To determine when interest should be charged on overdue accounts. To identify irrecoverable debts that should be written off. No. To locate incorrect posting in the sale ledger. Yes, this is correct. To obtain totals to enter in the prime book. No. We take the totals from the prime books. Okay. Getting my point? We prepare prime books. We don't take data from control accounts to prime books. We take data from prime books to control accounts. So D option could not be the answer. When preparing a sale ledger control account, what is the source of information for amount from receipt from credit customers? That's obviously cash book. Cash book will tell us how much amount we have collected from which customer. Plant and machinery 2,000 was incorrectly posted to credit side of the purchases account. The draft profit for the year was 63,000. Ignore depreciation. What was the revised profit after the correction of error? Okay. The revised profit would be when we have credited purchases for any reason. It means the amount of purchases is decreased by 2,000. If we increase the amount of purchases by 2,000, our profit will also decrease by 2,000. So 61,000 should be the answer. Because in income statement, when we increase purchases, our cost will increase and our revenue will decrease. When we decrease purchases, our cost is decreased and our revenue or profit will increase. Why are non-current assets depreciated? Okay. Now, depreciation to avoid overstating the value of non-current asset, yes. To charge costs of an asset as an expense over its lifetime, yes. To comply with the accounting principle of historical cost. Okay. No. We do not depreciate asset for the historical cost assumptions. To match the capital expenditure against the income it had helped to earn. Yes. So A option should be the answer. Getting my point clear? A option should be the answer. C. Okay. On 1st January, Rahim purchased equipment costing $850. It was estimated to have a working life of 5 years and a scrap value of $50. The asset was depreciated using the straight line method. At the end of the year 3, the machine was sold for $100. What was the profit or loss on disposal? Okay. What we have to do, 850 minus 50 scrap value divided by life 5. So annual depreciation is 160. Multiply by 3, 480 is depreciation after 3 years. The depreciation total would be 480. So 850 minus 480, the book value is 370. Okay, and if we are selling for 100, it means we are sustaining a loss of $270. B option should be the answer. Okay. Now 18. Imran maintains a provision for doubtful debts of 5% of trade receivable at the end of each financial year. The balance on his provision for doubtful account on 1st January 2022 was $700. Okay. Trade receivable on 31st December 2022 owed 2,000 more than they owed on 31st December 2021. How did the change in the provision for doubtful debts affect the profit for the year ended 31st December 2022? Now, the thing is, what we have to calculate, if already we have $700 on 1st January 2022 on the amount of trade receivable on 1st January 2022, it means this year we have to only apply 5% on the increase of trade receivable. The trade receivable is increased by 2,000 and 5% would be, oh, my calculator. Okay, see, 2,000 multiplied by 5%. That means 100. We have to apply the rate of provision for doubtful debts on the increase of trade receivable. So it means this year provision should be increased by $100. 2,000 multiplied by 5%, $100. So if we are increasing provision by $100, it means our profit is going to be decreased by 100. Okay, 19. Eridiane prepares a financial statement to December 31st each year. She valued all her inventory at cost on 31st December 2022. Even though some inventory with a cost of 500 and a NRV, a net realizable value of $350. What was the effect of this error? Now, if you know, normally what happens in International Accounting Standard 2, we follow, where we decrease, or we keep the inventory on lower of cost or NRV. Okay. Now, if we do not use the concept of IS2, it means our sorry, sorry, class. There is a disturbance. I think something wrong with my network. Hello.